Do you want to plan for today's trade? Hi, I'm CA RUDRAMURTHY, author, trader, and trainer. Welcomes you to this pre-market report. Yes, as expected, from 15,350, we saw market moving to 15,900. In fact, it could not sustain levels above 15,900, and yesterday we have seen clear close below 15,900 and some signs of profit booking. Do understand, every bear market will have sharp recoveries and again it will have a pullback down, and similarly every bull market will also have sharp down moves and again the regular trend will resume. Now the $1,000,000 question, no doubt America is in recession and it is in a bear market phase, but Indian market is very resilient. Yes, number one, fundamentally, relatively, we are far better than other nations of this world. Number two, our retail public, through investing either on indirect route or through direct route, they are providing definitely resilience to this market. And let me tell you, all the FII selling more or less is getting absorbed by DII buying. Now the question is, who are these DIIs who are buying? Nothing but these domestic institutional investors are getting money from the retail public through the general route, and these people are investing money which might come to those from mutual fund or from any other indirect means of investing in equity market. And if you see today's SGX Nifty, it is indicating a gap down open of around 80 points, open around 15,750. Brent crude, which came even below $110 per barrel, now again went back to $116 per barrel. And let me tell you, Brent crude is the deciding factor on what next big move in market. But right now we are in this tight range of 15,750 to 15,900. Don't come to a conclusion that yes, 15,900, the top is made yesterday and again we are coming down. Today's closing is very important, and kindly make note, till we close decisively below 15,700, this market can again make an upward move and test back the previous resistance of around 15,900. And if we can close above 15,900, then yes, 16,200 is the next level where market can attempt. Now people immediately ask me a question, is it bullish or is it bearish for short term? And let me tell you, you don't have to decide. This is where people who don't have market understanding, they do the mistake. They dictate terms to market saying that I am long, so you please go up, or these people say I am short, so Mr. Market, you please come down. No, professional and profitable traders, whom I call as pro traders, what they do is, if market is showing signs of bullishness, they will go on the long side. If market is showing weakness, they will short. So it is not market has to follow you, it is you who has to follow the market move. Now what to do? Very simple. If we close below 15,700 on a closing basis, if Nifty comes below 15,700, then yes, 15,900 is considered to be the top. One can look at selling. However, if we are not closing below 15,700 and after today's gap down open, if the lows are clearly held and market takes support in this range of 15,700 to 15,750, then yes, even this gap down will be used as buying opportunity. So what has to be done is dependent on what market tells you to do and not what you tell to market will ever happen, and market will follow you. And if you look at now, cryptocurrencies fall. Repeatedly I was telling, never ever put your money into cryptos. They don't have any asset backup, they don't have any legal backup, and there is no cash flow stream which comes from crypto, and this definitely is not a place to put your money. And I even told, at least if you put money to Tirupati donation, you will get some punya or you might get some blessing. But if you put money to cryptos, you get nothing, not even some blessings. So these are places where people are now learning that yes, they made a big mistake. But however, this is where experience and expertise matters a lot. And also let me tell you, this is the time to move away from low quality stocks and move to high quality. Now people ask me, what are these low quality stocks? See Paytm, see Zomato, see stocks like Idea, Yes Bank. These are all wealth destroyers. And if you have any of these stocks, it is definitely time to save the money left out, exit those stocks and move to quality. See, yesterday you got a first bounce in Paytm and the stock was closer to now 700, up 10-11%. I still remember when some stake was bought by SBI and the group of consortium of people. Yes Bank, they purchased at 10 rupees, and in market Yes Bank from those levels of 10 rupee went up to 80-85 rupees, I remember. And I was telling people, this is God sent opportunity for everyone to exit Yes Bank at those 80-85 level. But people thought, no, Yes Bank will come back to 400 rupee, 450 rupee, and then Yes Bank is back to those levels of 10 rupee, 12 rupees. And let me tell you, similarly, Paytm, whatever is the news, it is now giving you a bounce. This is God sent opportunity. Any rise even further from this level, start slowly exiting the position on every rise. And the same rule applies to stocks like Zomato, Paytm, and let me tell you, Idea, and all these type of junk stocks. You have to get out of them and move to quality. People ask, what is quality? Yes, stocks like Bharti Airtel, Reliance Industry, Maruti, Tata Motor, these are all M&M, these are all quality. So you have to now exit these things. And some people say, sir, I have bought it at higher price. I bought Paytm at 2000 rupee. How can I sell it at around 700 to 800? I'm making huge loss. If you don't book your loss now, you will make further bigger loss. Number one. Number two, markets are least bothered about where you have bought Paytm. You might have bought Paytm at 2000 rupee. You might have bought Yes Bank at, let us say, 400 rupee. Market doesn't know where you have bought and it is least bothered. I'm sure each program of pre-market report does not just help you to prepare with stock news, with what is happening around and also nifty levels, but it also gives you one big learning every day. And today's biggest learning is, don't ever have an anchoring bias. Anchoring bias is nothing but you have bought at that particular price, so till the price comes back to your price, you don't want to exit it even if it is a small loss. But let me tell you, if you have anchoring bias, that is the price at which you bought, you want market to come back there to exit, and this we call as anchoring bias. If you have that, you will still make bigger losses because market does not know where you have bought any share at what price. And any rise in this type of junk stock, leave your anchoring bias and exit the stocks. I'm sure today's program has given you inputs on also what stocks to sell and buy it for your investment portfolio. And I've given you names like Reliance, Bharti Airtel, Maruti, Tata Motor. These are all stocks which you can definitely buy and shift from low quality to high quality. Do consult your financial advisor because I don't know your time frame, risk level, other stocks in portfolio, all that. So ensure all these inputs, whatever I provide, you take the responsibility of execution. And I'm sure this program has added tons of value as usual. And do join hands with me to spread right financial literacy by forwarding this video to as many people as possible. Wishing you a very profitable trading day. Thank you so much for watching. Signing off, Rudramurthy.